The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 16th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with some empowering beliefs. In fact, let's begin our day with the empowering beliefs from the Great One. You've heard this before. What you think about, you bring about, and what you focus on grows. Would you like to know how you make that happen, folks? There's 6 easy steps in order to bring that to fruition. I want you to try this for the next 30 days. It could change your life. Step number 1, write on a card or a memo pad, your phone, something like that. Write down what you want more than anything. Make sure it's a single outcome and that it is clearly defined. So you can write a list of all kinds of things that you do want, but then key in on the one thing, just like Curly said in that movie. You know what that movie is. I just can't remember it, but you know that. One thing. I just want you to come up with that one thing that you want more than anything else. Now, here's the key. Don't do it in your head. Write it down on a piece of paper. Write it down on a piece of paper. I say write it on a piece of paper as well as that memo pad of your phone. Number 2, don't show it to anyone. Don't show me what you just wrote down. I don't want to see it. But I do want you to carry it with you so that you can look at it several times a day. That's step number 2. Number 3, I want you to think about it in a cheerful, in a relaxed, in a positive way. I want you to do it each morning as soon as you wake. I want you to pull out that thought of what it is that you want, and I want you to look at that. I want you to focus on that. What you focus on, folks, grows. What you think about, you bring about. You see, here's 3 easy steps. There's 3 more. Look at it before you go to bed each night. And as you look at it, remember that you must become what you think about. And I want you to use your imagination. After all, it is the strongest nation on earth, and that is your imagination. Number 5, and this is the difficult part. What you've got to do is you've got to stop thinking about what you fear, what those things are that are stopping you from being able to obtain that what you really want. Each time a fearful or negative thought comes into your consciousness, replace it with a mental picture of your positive and worthwhile outcome, that what you have written down. That's the most difficult aspect of this whole thing. Number 6 is each day of this 30-day test, do more than you have to do in order to achieve that outcome. Do more than you have to do. Folks, take control of your mind, knowing that your returns will be in direct proportion to what it is that you give. Yes, folks, what you think about, you do bring about, and what you focus on grows. And those are the secrets to how Tom makes that happen. Now let's go check out these markets. What are you thinking about? The Dow is down 54 points. It's trading out at 16,427. The S&P is off 3 points, trading at 1844. Composite down 1 point out here, trading at 4213. The little engine that could and would and should is the Russell 2000. It's up 39 cents. It's trading at 1171. 75. Apple off $3 and change. Microsoft down 17 cents right now. Google is off, it's up 5.81. Cisco down 4 pennies. Lead the charge to the upside here. You've got Priceline up $12. That's up 1%. LinkedIn up 4.5%. That's up $10 and change. Chuck E. Cheese Entertainment up $6 on a buyout. Google's up but almost $6 right now. It's trading at 11.54. Rentrack Corp, RENT, is a ticker symbol. That's up 13%. I remember looking at that equity a few weeks ago. Rent Rent is up. BlackRock is up $4.50. It's off of its highs of the session. Sarepta Therapeutics joining in on the game. They're up $4. That's up 21%. Solar City up $3.60. Tesla Motor up $4.14 to the downside. New Skin Enterprises just getting crushed, really crushed again. I suspect we have not seen the end of that crush out there. Intercept Pharmaceuticals off $21. Best Buy. That has created the island of islands. That has created the chain of islands. We'll take a look at that. And when I mean a chain of islands, a huge island reversal signal inside of Best Buy. I wonder if that spells curtains for the stock out there. ClearCore Corporation, they're off $4.85. Herbalife down $4 and change. Asamil Holdings, ASML, off about 4.5%, down $4. Decker's Outdoor down $3.75. Our call number 877-927-6648. Now, as we went into the last segment, I was taking a look at currency pairs for one of our folks inside of the den. He wanted me to take a look at the euro, yen, and I switched over to some other tabs out here, and I happened to have the euro Japanese yen 30-minute chart up on my screen. So, in order to get an idea for what this market might do, because the euro Japanese yen does a really great job of correlating to the U.S. market out here, we've either seen a low inside of the U.S. market right around this time frame or so. And I can say that here because what's formed inside the euro-Japanese yen is a 0.786 Gartley buy pattern. And it did it with a nice hammer candle. I mean, a big hammer candle as we were coming in at 10 o'clock session out here. What is a Gartley buy pattern? Well, Gartley buy pattern is where you've got an existing trend that's in place, and certainly here in the euro-Japanese yen, no question in my mind that this has been in a really nice uptrend. So here you've got an uptrend. This last uptrend was coming off of this is a 30-minute chart that we're taking a look at. So let's put this in perspective. January 15th, the low out there at 141.78. Makes a run up to a high that came in here at about 11 o'clock last night. In fact, came in just, the full moon. This is full moon Thursday out there. I think in the background I hear the wolves are getting ready. Do I hear that full moon howl? Alberto? Hello? There we go. There's our TFNN full moon howl. That came in last night at 11:53 Eastern Standard Time. It was a beauty if you saw it this morning out here. So we do have a full moon that came in. Now, what also took place was formed an A to B equals CD down. Made a 0.618 retracement. That took place at 5 o'clock this morning. Any Gartley pattern has got an A to B equals CD. Now what's going to be really key here, this hammer is not being confirmed as we speak here right now, but it is a 0.786 Gartley buy. That doesn't mean that you buy. It means you got your signal. You wait for the confirmation. We haven't gotten the confirmation. Here's the cool thing about this. This pattern, we're either seeing lows that are being put in the market, or this hammer pattern is going to fail and is very likely then going to turn into a butterfly pattern. We can see that the euro-US dollar, the euro-Japanese yen on the 30-minute chart here is in the oversold condition. That doesn't mean that it can't move a bit lower out here. But if this pattern here fails, this will turn into a butterfly, because you got the hammer out there. And butterfly says it takes it down to a price level of probably 141.48, maybe 141.103 out there, and that will put pressure on the market. So the hammer candle, which is a beauty, as it was forming this pattern. And that's if we see a close below this hammer candle, which, by the way, that price level is 141.998. That's going to be able to give us really great clues about the market that we are in here right now, at least for today's intra-session trading out there. I can only tell you what's going on in the market as we speak here. As we look at it, that could totally change at 11 o'clock when Basil comes on board, or could change at 12 noon when Larry comes on board. But here's a pattern here that if this fails, it says, you know what, we should see some lower prices that will be coming to us next until we see the next pattern form and confirm and complete inside of the euro-Japanese yen. So, speaking of full moons out here, let's go take a look at our full moon stock chart for the S&P 500. This is a S&P 500. It's got many of the new moons and full moons out here. So you had the full moon coming in specifically. On the ephemeris time, it says today, but you got to back it up by 5 hours in order to get to Eastern Standard Time. You don't have to, but I like to do that. And that says 11:53 was when the full moon came in last evening. So we got full moon Thursday. Now, Let's take a look at the last several full moons out here. Let's see if they've been able to give us any kind of buyable bottoms or highs. What have they marked out here? Let's go to the most previous full moon. Happens to have been December 17th. Now, I will tell you, my study of full moons is they've got a positive, they have a positive influence on the markets generally. Now, take a look at December the 18th. The market had moved down. That was December 17th, I should say. That was the following session was Uncle Ben Bernanke going away day out here. And you can see that certainly marked a significant low. In fact, we watched the markets move right up into December 31st out there when it made its high. Of course, that high was taken out yesterday. Was there a close above it? No, not inside the S&P 500. There was no close above yesterday's high inside the S&P 500. We had a new moon that came in on January 1st as we began the year. So I would say you could put that right over since it came in on a non-trading session. You can use either day that you want, first trading session of the new year or the last trading session of last year. So the new moon seemed to have marked a high. It did form an A to B equals CD down. That A to B equals CD down took us to the level of about 1815 inside of the S&P, and that was on 4 trading sessions ago. So the question is, so you get the new moon worked. That I would have to say, the full moon worked prior to that. That seems to have worked. I would say December 3rd out here, it did mark a low. That was the previous new moon out here. Only lasted for about 3 days. If you go back and you take a look at the previous full moon out here, that took place on November the 17th. That was also in between 2 time periods. That had an effect of about 3 days, in my opinion, out there. If you go back to the prior full moon, that looks like that was on November 1st out there. You'd have to say the market was moving up into that. I don't know that really did much, nor did the full moon lunar eclipse on October 18th, the full moon. But you can see full moons can act as a area of resistance out here. September 19th, it most certainly did. In fact, we had full moon and apogee. Apogee is where the moon is the furthest away from us during this cycle out here. Last time we had a full moon perigee, where it had marked a little short-term high, was back in July of 2013. So it is full moon Thursday out here, and we'll see that for our purposes. We're just simply going to go ahead and put that above the high out here, and because we had the market moving up into it. Now, let's go take a look at so speaking of the S&P 500, let's go see what is it that has occurred here thus far. We know that we'll go take a look at the ETF structure out here. What the S&P 500 did yesterday was it tested the swing point high and failed on price. I don't believe it failed on volume, but we'll go take a look at the SPY out there, and we'll get a confirmation of that. But we did have a test of the swing point high, and it failed to get over it. That's really all that we know at this stage out here. What we also know is that as we took a look at the actual index futures, that we basically have made no price movement, no gain since the open on Sunday. That's really what's going on Sunday out here. The actual open inside of the ES Mini was at 1838.50, and we right now are trading at 1838.75. So we've basically had a lot of hoopla and no hoop out here. So we basically have moved nowhere since Sunday evening. Now, let's go take a look at the New York Stock Exchange. What did the New York Stock Exchange do yesterday? Closed just slightly above again, 10,387.17. That's your October in 2007 high out there. Right now, New York Stock Exchange trading down just a bit, trading out at 10,366. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Market's really not doing a whole lot. The Dow is the leader in the clubhouse to the downside. It's off 0.3%. It's trading down $50. The S&P, somewhat flat. It's off $3. Not a big deal out there. The Nasdaq Composite, it's up $2, so that's flat. Russell is up 62 cents, relatively flat. New York Stock Exchange is down 18 points, but it's got net advancing issues, not net declining issues as we speak. Now only 32, but still net advancing issues nonetheless. Now, the New York Stock Exchange here yesterday, what it did was it was able to close above the October 2007 high out there, 10,387.17. That's the number. That's the magic number that it's trying to get above. Why? Because that is, you close above that, you keep closing above that, you start getting into breakout range out there. The actual, well, did it close? Let me see here. What's the high? Yesterday was 10. No, it did not. Let me refresh my screen out here. I thought that it closed above. Maybe there was something did not close above according to my current chart out here. Looks like it closed yesterday at 10,385.39, so it rejected that level out there. Now today, not providing us with any information whatsoever, just really an inside day as we speak here right now. So now, in order to provide us with information, real information, you need to see today more than 1,472 net declining issues. That would be some information that it would provide to us. Other than that, the summation index is up at the nice high levels. It's in the 20. Let me see, window. See if that gets me out there. The actual summation index reading 2658. That's a nice high level out here. It's actually kind of gets into jet propulsion territory out here once it starts getting up into these levels. So it looks pretty bullish. However, we are seeing a net declining line out here inside of the price oscillator, as well as the volume oscillator out here. So we really need to see that price oscillator get above the 171-ish mark out there to get rid of that divergent pattern that is inside of the New York Stock Exchange. I believe yesterday was right around the 96 level. Yeah, it looks like about 96. So still has its work cut out in order to do that. We take a look at the other indexes. Let's go do that, see what they're doing as we speak here right now. The Russell 2000, this is a biggie for sure because that was a 3 drive to a top pattern, and guess what? Gone. No longer there to be paying attention to because, you pay attention to it from the standpoint that something that was so bearish was taken out. We saw it close above that, above all kinds of resistance. There was a gap above that area. That's important. That's December 26th. So the Russell 2000 made its highs on December the 26th, whereas the markets, the New York Stock Exchange, the Dow, S&P composite all did that on December the 31st out here, but not the Russell. Russell likes to, do its own thing out here. Oftentimes maybe an early indicator of what's going on. Well, certainly was a case out here. Had a nice little shooting star to confirm that 3 drive to a top pattern. You say, what's a shooting star? Excellent question. It is the kin to the hammer candle, just as the hammer candle at lows is a significant bottoming candle signal. The shooting star at highs is a significant topping candle. And when you have that complete at a nice 3 drive symmetrical 3 drive to a top 3 drive to a top pattern out there, that's significant. It was significant enough to even have some continuation on the following trading session with a bearish engulfing candle. That has now been taken out. It says support now should actually be the top of that candle, that shooting star, which is at 1167.96. You are trading at 1172.16 right now. So the Russell 2000 has officially broke out. It has given the best breakout signal, in my opinion, of all of the indexes out there. If you take a look at the NDX 100, the NDX 100, what it did here yesterday was it made a 1.272 expansion of a set of swing points. It would seem to me logically, let's go ahead and get rid of this. Let's do this while we're live on the screen here. Let's get rid of the Gartley butterfly out there. Let's delete that. There we go. Now, what we can do is let's go draw in. So many of you don't have the same set of tools I use on my Ensign software out here, but you can create many of these patterns with your tools that you have on your system. Let me show you how you would do this. Number one, well, I've got a tool that measures time. So see if you've got a tool on your system that measures time, and that's just simply this little cycle tool. And I'm going to go from the high out here, this little doji high from December the 9th, to the very next high that came in, which is my B point of an A to B equals C to up. But what I'm doing is I'm taking a look at the second drive out here, and that happens to be on the trading session of December 31st. That says that on January 23rd, right around January 23rd, that would equal my time horizon in order to be able to draw in another 3 drive to a top pattern out here. So your mission while we're at this break is to figure out what would be that price level that would make this a nice symmetrical 3 drive to a top pattern so that we can try to go project the potential high inside of the NDX 100. 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math.
All right, class, we're back in session. Everybody come back from recess. Now, while we were away, you were supposed to be trying to identify the price point of where the next potential 3 drive to a top pattern could set up inside of the NDX 100. And I know that each of you out there, that what you did was you went ahead and you took a look at the expansion of a set of swing points. That set of swing points here was the December 31st swing point high inside of the NDX 100. That was at 35.92. Sail the ocean blue all the way down to the low that was put in here on January 13th. That was at 34.99.37. If we take a look at our expansions here, let me just put this on the screen here. So we've got a 1.272 expansion. Well, that's what we hit yesterday. So that's not the one that we were looking for. We're looking for the 1.618 expansion that comes in at a price point of 36.4925. So we know that that is really our target, potential target. We have no idea where this pattern will set up. What we do know, it's a leading indicator pattern, and it's one that we can draw ahead of time. And that way we can be ready to act if we want as price gets up there. So what do we do next here? Well, what I'm able to do, obviously, and this is actually how I go ahead and I identify these patterns ahead of time. I know where the first drive that I'm using is. That's that little doji candle on December 9th. So I'm just simply going to grab the top of that swing point. I'm going to come down to the low that was put in on December the 18th. The system's automatically going to go pick up the that high on December 31st. Now I'm just going to drag this all the way up to both where price and time would meet at that 1.618 expansion at the 36.49 level, and voila, there is your 3 drive to a top pattern. I'm going to get rid of the expansions out here. That would give us a very symmetrical pattern, in the 3 drive. We'll also see that it happened to be just about a 1.618 expansion between drive 1 and 2. Drive 1, the beginning point, the X marks the spot, and that is at the December 9th high out there. So that, and all the way, and so it was about a 1.618 expansion between that swing point high and the December 18th low out there. So you got two 1.618 expansions coming together. We know there's a potential for an A to B equals CD, so we're going to use a range out here. That range would be somewhere between 3650 to 3668. And if that were to complete right around January 23rd and then go ahead and give us a reversal signal here, that would be a 3 drive to a top pattern out there. We'll see if that's the one we'll see if that comes to fruition. So we'll leave that on the screen here, or if I accidentally erase it, just hit me upside the head and say, Steve-O, go draw that 3 drive to a top pattern. So that's in the NDX 100. That's what we'll be looking for, of course. Should that pattern move, should price move up to that level, what we will be looking for is we'll be looking for that pattern to complete with a small ranging bar, not a wide ranging bar, because if it's a wide ranging bar, it says, hey, we just said it, but let's go ahead and forget it, because that is not how markets end out there, which would be on wide-ranging bars. Let's go take a look at, there were some questions inside of the den before, while we were at the break here, about some divergent patterns. So let's go take a look at some of the indexes out here just to see what it is that we've got going on. We're going to use the Rhodes Momentum tools out here. So let's call that back up on the screen as soon as I can find it. Where did it go? Here we go. So let's start off with, what is the strong hands out here. One of the great tools to be able to identify market tops and bottoms is the price relative strength indicator. If you're just brand new, if you just happen to be tuning in today, then, stay tuned. Continue watching the show. I bring it up. I show you how it's called every single market high out there, every single market top of any significance out here. It has been a pattern that was present before crashes in 87 and 29, all across the board. In 2007, not crashes, but significant reversals. And right now what we have inside of the strong index out here is we happen to have a price relative strength divergent setup, just a setup, not a confirmed pattern. All that this tool does is starts to develop and identify when we start to have price moving higher on less relative strength. And that's what we had yesterday. As the composite had gapped up, it moved up to a higher level. Now, there's no reversal signal out here. Without a reversal signal, we take no action. Because if you were to take action, your assumption is that you know where prices are going to stop. I say the way to know where prices are going to stop is let the bulls and bears tell you where prices are going to stop out here. So this is important for us to be paying attention to, because it is the strongest index out here, and that's on the composite. So the composite has a setup. It does not have a confirmation. So we do want to be paying attention to it. Now, and what I say by a setup is when you don't get those confirmations, you don't want to enter those trades out here. Price can continue to rise. So I've got this program here where each day, or each bar really, because we can use this on multiple time frames, it goes out and tries to identify those significant highs. We looked at, in the first hour, we took a look at light sweet crude on the 120-minute chart as it was forming a bottom out there before it was getting ready to make its turn. And, in fact, we saw a price relative strength divergence pattern out there. So it works so well. So that's on the composite. Let's just start flipping through these. Let's take a look at the Dow Jones, see if there's any divergence that we have out here inside of the Dow. And on the Dow, on a daily chart, we don't. Here's a perfect example of a divergence that begins to form, but you get no confirmation. You get these lines here, and I'll just go ahead and expand it on my screen here so you can see, so it just picks up, hey, you got price moving higher on less relative strength. That's the lines at the bottom. The lines stopped drawing on this candle recession right here on December 26th, and the reason they stopped drawing is because the RSI moves to a higher level. So no longer do you have a divergent pattern out there. We never got the setup. You just never got the confirmation. That's the reason that you don't just trade any pattern. I don't care what. Well, this is my line of thinking. That's it. Is that you don't trade any pattern out there and enter it until you get a confirmation signal. That's really what it is. That is if you want to know what the trick to trading is, that's the trick. Well, that's one of the tricks. There's a few. And I don't really call them tricks. I call them strategies. You see, there's in life, and think about it like this. Those of you who own companies, or if you've owned a company, or you can, guess what? That applies to everyone. If you happen to have kids, you run a household, let me tell you what, you're running a company out there. And there's differences, and so for you moms and dads out there, grandmas or what have you, there's a huge difference between strategy and tactics. And right now what we're taking a look at here, this is a tactic. A tactic is price relative strength divergence. That's all that it is. A Gartley buy and sell pattern is nothing more than a tactic. It's a tactical approach to be able, a 3-drive to a top pattern. It is nothing more than a tactic. It is a tactical approach to be able to, in this case here, they're leading indicator patterns, to be able to identify where the next battle may take place. This is a tactic. Tacticians get slaughtered. Tacticians without strategy get slaughtered. Write that down. You show me a strategist. Strategists will win every battle out there. And that's what you want to have. If you're hiring people, and somebody, you want to be able to have strategists out there, not tacticians. Tacticians will just simply get slaughtered. In this case here, it shows you, here's the tactics of the price relative strength divergence. So I'm ahead of time identifying tactically what's going on. But with regard to where it is that you're going to go ahead and put your money at risk, you don't want to do that. You want to have a strategy for doing that. And the strategy is let the market go ahead and communicate to you that, in fact, it may make a reversal. Just because it makes a reversal, that doesn't mean that it's that the pattern is going to work. That's where you use the psychology of trading. Trading is 80% psychological. You knew that, right? And what's the other 20%? Right? It's in between your head. It's in between your ears. Not your head, but it's in between your ears. It's 100% psychological. That's all trading is. It's 100% psychological out there. That's why we go ahead and we use stops. And anyway, inside the Dow, not to belabor that issue, but it's easy for me to do that because I'm so impassioned about that and wanting to help you be able to make money, protect your assets out there. Let's take a look at the Dow Jones Transportation Index out here. If we take a look at the trannies now, which have been moving up nicely, guess what? They've been doing it on what? On less relative strength. So we now, inside the transportation index, we've got a price relative strength divergent pattern. And right now, today, if we're to close like this, strategically, what we've seen here is you've got a reversal signal that is forming out here inside of the Dow Jones Transport. So these things have been hot. They've been on fire. Maybe there's lots of... Now, look, from a momentum standpoint, you've not gotten any kind of reversal signal out here. But in the trannies... Right now, as it's trading here right now today, it looks like it's priced out at about 74.55. We're seeing a reversal signal in a price relative strength divergent pattern out here, and that's inside the transports. Let's go take a look at the HUI out here. Let's go take a look at the Gold Bugs Index. Oh my goodness, look at what it formed at the bottom down there. Take a look at that. It formed a price relative strength divergent pattern right down here on December 20th. Tactically, that's the pattern that was setting up. Strategically, it gave you a buy signal right here. That's when my chart turned to a blue. That was on December the 25th. That's when the first actual signal of going long actually came into being, and that is in the HUI, which is weaker than the XAU. So let's go take a look at the XAU. Let's go see what the XAU actually did out here and take a look at different patterns. Let's take a look at the XAU. The XAU itself, which is stronger, has been stronger in my opinion, than the HUI, that did not create that same price relative strength divergent pattern. But how cool is that? To know that if you were trading the mining equities, that it's the HUI that actually has been the weakest, yet it gave you the nice big bullish reversal signal out there. Something to think about. In any event, let's continue doing this. Let's keep strolling through the Rhodes momentum trading strategies, the tactics that are out here. Let's take a look at the Russell. Let's take a look at the... I don't think I got to the NDX. Let's do the NDX 100 out here. If we take a look at the NDX, let's see what it puts out. Oh, my goodness, the NDX 100 right now. Guess what it has? A price relative strength. This is on the daily chart, a price relative strength divergent pattern. Now, the last time out here, the last time we saw tactically when those set up, it began setting up on December 20th, also set up on December 23rd as well as December 24th, but it went away, came December 26th out there. So that pattern had the tactics out there, but you never got confirmation. Now we're seeing another pattern set up here. We do not have confirmation in it. Of course, if you did get a close below yesterday's open, that would probably give you your bearish reversal signal now because there's a rising window, because there's that gap up, and the gaps are your friend. On gaps up, on rising windows, they're actually your bullish friend. They're not your bearish friend. That is for sure out here inside this, you would want to see that window get closed so that no longer can act as a support level. But inside the NDX 100, inside the composite, those they have inside the Dow Jones transports out there, which I think would guess most of the media outlet is talking about. I don't know because my computer, I didn't get a chance to really even listen into any of the CNBC stuff this morning, while I was putting things together, because instead I was trying to get my computer up so that I could take care of my daily task. One of those, just simply sharing time with you. Now, as we take a look here at the, let's take a look at the New York Stock Exchange. Let's go see what it is doing out here today. The NYSE, no reversal signal out here inside, no price relative strength, divergent pattern out here. So that's okay. Let's take a look here at the Russell 2000. That was the 3 drive to the top pattern that was taken out yesterday. There is no reversal signal inside of the Russell 2000. There we go. Having gapped up by yesterday. Let's see here. What else? Let's take a look at the stocks. Man, talk about being on fire. The semiconductor index. So let's go see. Oh, my goodness. It has been on fire. And guess what? It's got a price relative strength divergent pattern. In fact, let's pull this back. It's the first one at the highs here that we have seen for quite some time, I believe. Yeah, here's the last ones out here. Well, the last one that took place that was confirming I got to pull this back a little bit further. Let's do that. Let's pull this back a little bit further. If we go back into the time frame, the very first time that it reared its head was back in May of 2013. The very first time that you got any kind of a bearish reversal signal on this was on May 22nd. We just saw price really inside of the SOX begin to consolidate and move sideways. And one of the things that you want to do when it comes to trading and investing is the markets that are the most difficult to make money in are markets that consolidate sideways. So your mission in whatever trading strategy that you use, because most of them are basically momentum-based trading strategies, your outcome, look, an A to B equals CD, is a momentum-based trading strategy. The Chapman wave, it's all about momentum, going from a peak A, B, C, D, maybe all the way up to that rogue wave G out there. That's a momentum-based system. Rhodes momentum indicators, it's momentum-based. Most systems are momentum-based to the upside or to the downside out here. So the key for each of us to really master the markets is to, as quickly as you possibly can, identify consolidation patterns out there. Because what will happen is momentum trading strategies will get slaughtered, because they're not very good strategies inside, especially if you're in tight consolidation zones out here. And in essence, that's really what took place here inside of the New York Stock Exchange, where it went ahead and it consolidated sideways out here. So what we have right now, because the SOX index really took off. Nice big candles out here, January 14th, yesterday with the gap up. But what it's actually doing here today, the SOX is, and there's a little window. That window's got to be closed, because that window will, in fact, act as a support, or should act as a support area. And that's the high, it looks like, from January 14th out there. And that high is at 540.14. You're at 540.72. But you are getting a price relative strength divergence reversal signal here inside of the SOX index. Let's see, the S&P 500. If we take a look at the S&P 500, we go see what it is doing out here. On the S&P 500, no relative strength divergence pattern out here inside of the RSI. So I hope that's helped you. I hope that's more than helped you out there. The difference between a tactician and a strategist. 877-927-6648. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's off 89 points. The S&P is down 7 now. Composite off 8 points out here. Apple down 350. I had a caller earlier while I was going through my little dissertation out there, but sometimes I just get impassioned. I live with passion, so I was just on a subject matter that just thought it was worthwhile to share with each of you. He was calling about ticker symbol FE. I believe that is a First Energy Corp out there. I don't know whether the caller was looking for a long trade. I'm going to assume it was a long trade out there. First Energy, FE, again, is the ticker symbol. It's trading at 31.91. So we can take a peek at the chart here. Now, if you're watching us on Tiger TV, especially for your different trading styles. Let's assume that you're a swing trader, and I always believe it's important for you to understand, hey, what's the turbulence up above a head? In this case here, I truly make it up above a head because I use a weekly chart, so you understand, what's the weekly chart formation telling you? Is there some support, resistance, what's going on inside there? Is it a counter trend rally that may be going on? Just to give you information, inside First Energy Corp, utilizing the Rhodes Momentum tools out here, this thing has been in a significant bearish mode. I see no reason on this chart here from a momentum standpoint, because that's really what it's really all about. It's all about momentum. You want to see the momentum change, and right now we got the caller back. We got Victor. Victor, First Energy Corp. Tell me what you were doing and how I can help you.
I was just looking at all these utility stocks as they pay big dividends. And what do you think of the Dow Jones utility? Are we in like a wedge shape? Why would it be going down? It's getting 5-6% on your money.
The Dow Jones Utility Index. Let me see if I don't know if I've got that.
UTIL. You put a dollar symbol in front of it.
Yeah, no, I know. I just wanted to see if I actually had it on.
Why
here.
are they going to go down? Even if interest rates go down, you're still going to get your money. You know what I mean? Or do they plan on? Are they telling that telltale sign that the market's going down? Or
well, I mean, your goal is what to protect your capital or get dividends? What's the
if you get locked in, like say you do a bad trade, the worst that happens is you gotta take the dividend. You know what I mean?
I think you can lose a lot more equity than you can ever make up in what a dividend is going to pay to you. I think that
I don't know. The point figure says it goes back to 25. In 2009, the low in this stock was 31. It's a real crappy company, but I don't know.
And you're talking about FE at the moment.
Yeah. And I see the utilities. The point figure said they're going down to 450. A retraction. That's what I'm saying. Is this a telltale sign of the market going ahead, or what's the deal?
That I don't know. I mean, I will tell you that FE on a daily basis had a nice sign of strength. So if we just take a look at that, which would be from December 20th, and so if you're looking to buy this because that was a sign of strength and the pullbacks here have been, okay, your buy on this would be at 31.29. Let it come all the way back to where it really broke out. Well, you could have a couple of different places to take a look at a buy. It could be maybe like right around here, which is a low of 31.71. So whatever you were planning on risking, so today could be a spot. And then the next spot would be right around 31.78 with a part of your position. But I will tell you, what you are doing is you are fighting the trend, and I don't like to do that. I would rather because go ahead.
You think the utilities are going to, like everybody's going to pour their money into that? You know how there's been sector rotation for, here, and there.
Sure.
You think there's going to be sector rotation in utilities? Because they've just been hanging out. They haven't been doing nothing.
Well, the cool thing is with a momentum-based system, such as mine, is when people start pouring money into whatever it is, you're going to see the momentum change, and that's when you really want to jump on board. Inside FE back in March of 2013, you saw that start to move to the upside. So don't be the hero out there and try to buy the bottom. Instead, wait and just jump on board the train and just have your ticket punched. All right, my friend? Hey, thanks so much for calling. We're out of time. Folks, stay tuned. Our man Basil Chapman is up next. Thanks so much for joining me. Have a terrific Thursday, and I look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.